afternoon and welcome to BizTech Asia's Asian Midday Market Watch on Thursday, the 25th of April. I'm Jeffrey Halley, and today my co-host is our founder, Brian Fernandez. So it's a regular Dad's Army panel today for the show. And our guest today, of course, is David Kuo, founder of the Smart Investor in Singapore and a great friend of the show. David, welcome.
Welcome to the two of you as well. You know, the two of you remind me of the two characters in the Muppets, yeah? I mean, the way you've got the screen set out, you're like the two grumpy old men, up on the balcony somewhere. That must make me what? Kermit the Frog or Fozzie Bear?
But it's smiling, so that's the big difference.
I don't mind being the Grouch. I'll jump out of a rubbish tin if I have to. There we go.
I like your reference to Dad's Army. So which one of the characters would you be? I suppose you think you're Captain Mannering, are you?
Maybe, but I actually quite fancy myself being the Sergeant Major, Windsor Davies. There's probably not many of our viewers who know who Dad's Army is, as I think about it.
I think
you've got the wrong show, because that one is It Ain't Half Hot, Mum, yeah, with Windsor Davies. And
it is. Yes, then I would be Captain Mannering. Yes, correct.
You would be Captain Mannering. Brian has no idea what we're talking about.
Brian has no idea. Brian's a bit younger, but okay.
We do reruns, Brian.
Well, let's move on from famous British comedies to the financial markets and have a look at what's been happening around Asia today. Pretty much a sea of red. Australian and New Zealand markets are closed for Anzac Day today, but in Japan, the Nikkei 225 is down 2.06%. Shanghai is up just 0.11%. The Hang Seng is up 0.28%, but the Kospi is down 1.35%. The STI in Singapore is down 0.3%, and Kuala Lumpur is down just 0.8%. David, it does look like a tech hangover again hitting South Korea and Japan. Can you tell us what you think of today's stock market moves?
I tell you what, Jeff, we might think that, but I think there's something else, that is weighing on investors' minds, and that is number one, the PCE data, which is the inflation data that the Fed likes to look at, and number two, it is the US GDP figures, the first look at the US economic numbers for the first quarter. And I think those two are probably weighing on investors' minds a little, because if the PCE data doesn't come out to be favorable, in other words, if we see that inflation is still relatively sticky, then, that makes it very difficult for the Federal Reserve. But you're also right. I mean, there is a bit of a tech hangover as well. But I think there are many things going on. And if we get some good PCE data this week, then I think, the markets might be a little bit more reassured. But if the PCE data doesn't come out to be favorable for the market, then I think some of those commentators who are even talking about a possible rate hike in 2024. Yeah, I know, Jeff. Yeah, I mean, it wasn't that long ago when we were talking about 6 rate cuts in 2024. I know. And now they're even talking about the possibility of a rate hike, because inflation is proving to be quite sticky in the US.
Well, let's think about the results overnight that we saw from Meta. It was definitely a Meta migraine. Those results came out after market. Meta's price fell by, I believe, around 15% in aftermarket trading, dragging down some of the other tech stocks with it. Can you just walk us through why there was such a negative response to Meta's results, and what markets are trying to say to Mark Zuckerberg?
The results weren't really that bad. When we had a look at the revenue numbers, they were up compared to this time last year.
Yeah.
The profit numbers were up compared to this time last year. So if we had just taken that, I think Meta's share price would have been relatively steady, if not on the way up. But what happened was that Mark Zuckerberg came out and he was talking about the need to spend $40 billion on artificial intelligence. And he hasn't even sorted out his augmented reality yet, the AR side of things. And now he wants to jump into artificial intelligence. I mean, $40 billion is not chicken feed. I mean, it's an awful lot of money. And investors are saying, well, what are we going to get for this? I mean, it seems as though lots of companies out there are spending billions and billions of dollars in artificial intelligence. I mean, Brian might have a different take because he's slightly more tech savvy than us two Dad's Army people. But where are we going to get the returns from? What is going to happen? I mean, you pump all this money into artificial intelligence, and one of the big dangers is that you're not going to get the returns that you expect. I mean, there's a famous quote that says, when everybody has AI, artificial intelligence, it means that nobody's got AI because everybody's on the same playing field. It becomes a level playing field for everyone. It only works if you're the only guy that's got AI and nobody else has got it. But it looks as though everybody might have it. And the big worry then is, are profits really going to sort of follow the kind of investments that we're putting into artificial intelligence?
And David, I have a response to that, which is a very old response. In a gold rush, the picks and shovels people make the money. And I think from this AI gold rush, that's from an investment perspective, that's what we should really be looking at, the picks and shovels guy. So the obvious picks and shovels person was NVIDIA, but then the less obvious ones are the ones that are coming up. There are quite a number of the fast followers that eventually will then, as you said, it becomes ubiquitous. You will use the cheaper chips. And that's some of the things that I think investors may be looking ahead for value and asymmetrical returns. That may be the opportunity.
Well, I would go one step even further back than you, Brian. I mean, sure. I mean, you might say NVIDIA, but then the big problem is which one of the chip makers is going to be the 800-pound gorilla in the artificial intelligence space? Is it going to be NVIDIA? Could it be AMD? Could it be Intel? Who is it going to be? And sometimes, that is almost as bad as being a gold prospector during the big gold rush, because some guy will actually sort of strike gold, the others will go home empty-handed. So when I say I'm going to take one step further back, what I'm looking at is, what do all these chips require? And they require energy. And so therefore, I'm looking at the energy companies. I'm looking at companies in Malaysia, such as Tenaga, right? Tenaga Nasional. Because these chips are going to be really energy hungry. And when they're sitting in some data center somewhere, performing all these billions of calculations per second in order to produce the results that we want, they're going to be eating up a lot of energy. And so consequently, if you invest in the energy companies, that is where the picks and shovels are, Brian.
And then, and just using your Johor example, there are 18 companies in Johor, your Tenaga Nasional, 18 data centers being built in Iskandar as we speak right now. Because there's no more data centers that are going to be built in Singapore because they are too energy intensive. But Malaysia has a lot of energy, of course. And obviously that's an opportunity there. But Jeff and I were talking before the show about really, and I think that's a good opportunity to ask you about this around Iskandar, Jeff. Maybe you want to ask him the question on the hot news out of Iskandar.
Well, I was going to say it wouldn't be a midday market watch with David Kuo if we didn't talk about Malaysia and didn't talk about Johor, because we know that Iskandar and Johor are places very close to your heart, both from a food perspective and from an investing perspective. Malaysia is hoping to open a casino in Johor in the near future. What are the implications, I guess, for its near neighbours if this project does get off the ground?
Well, I think, the rationale behind putting a casino in Johor is pretty obvious. You have over in the Iskandar region a big housing development that is not fully occupied at the moment. And so putting a casino there could attract people into Johor, and it could attract people to maybe even buy a residence in Johor. I mean, over here in Singapore, any Singaporean, any resident going into the casino has to pay a fee in order to enter. But if we go over to Malaysia, if we go over to Genting Highlands, we don't have to pay a fee to enter the casino. So in that sense, it does make sense to open a casino over in Johor. My big issue is that the two people who are interested in opening or investing in the casino in Johor, one of them is already Genting, that has this casino in Malaysia already. They also have a casino over here in Singapore. And the other one is, of course, Vincent Tan, who would ideally like to get into the gaming arena. Whenever any company thinks about opening a new outlet anywhere, they need to weigh up cannibalization. In other words, who are the people who are going to go to Johor to gamble? Most likely it will be the people from over here in Singapore that will be going to Johor. These Singaporeans would previously have gone to Genting Highlands, yeah, to the casino over there. Or they might have gone to the one in Singapore. Now you're opening up one in Johor. Where are the customers going to come from? And it's not as though we're talking about the 1960s, 1970s, when the only country, well, the only place that had a casino in Asia was, of course, Macau. And everybody went to Macau. And then now you've got plenty of casinos in Macau. You're also getting casinos over here in Singapore. You've got them in Malaysia. And they're talking about, opening more casinos in places such as the Philippines, Korea. Where are the customers going to come from? And that, I think, is the big danger. On paper, it would be fine. But we go back to what we were talking about in terms of the chips. When everybody has casinos, it means that nobody's got casinos because we're all on the same playing field. And that, I think, is the big danger. When you're the only standout one in this region, say Singapore, when we had 2 casinos here in Singapore, that was fine. People would be attracted to come to Singapore. But now you've got them all over the place. It's almost as though you've got no casinos at all.
No, absolutely. Totally agree.
Well, David, that's my view. That is only my view. But I understand, that you've got a lot of empty apartments over in Iskandar that need to be filled. And I'm sure Country Garden Estates would like a casino there just to attract more people into the region. And maybe there might be some kind of spillover effect where people will say, guess what? I'm already spending 5 days a week in the casino. I might as well buy an apartment here rather than to drive backwards and forwards. That might be the reasoning behind it. But, there are unintended consequences when you do something like opening up a casino where there are already 3 casinos in close proximity.
It's interesting you mentioned Country Gardens and China, because I think a lot of Chinese actually bought the apartments in that forest city. But while we stay on China, something very interesting has been developing in the US this week. They passed a number of bills giving military aid to places such as the Ukraine. The 4th bill in that series was one that said that TikTok, ByteDance would have to divest TikTok in order to be able to continue doing business in the United States. It's a pretty aggressive bill. How do you think China is going to respond to this?
It's a really tricky one for China to step into at the moment. Yes, on the one hand, America has said to ByteDance, you either divest TikTok or we shut TikTok down. Those are the 2 options they have. They have a year to think about it. TikTok wants to appeal against this decision, and they may win, then again, they may not. But as far as China is concerned, China isn't really happy about ByteDance divesting TikTok. But all along, TikTok has said that it's not a Chinese company. And it's always said that it is a standalone company and that any data that it has is not repatriated back to China in any way. So it is a standalone company with its headquarters in Los Angeles and also in Singapore. So if China steps into the fray, what does that tell us about the relationship between TikTok and China? And so China has to tread very carefully. At the same time, China is trying to attract inward investments, maybe from America, from the rest of the world. If it is too harsh in terms of what it does to American companies that are already operating in China, then people are going to think twice and say, you speak out of both sides of your mouth at the same time. On the one hand, you say we're welcoming foreign investments coming in. And on the other hand, you're going to say, you come in and we're going to hammer you and we're going to make life very difficult for you. So it's not an easy path for China to negotiate. I mean, they could try and exact the same kind of measures on internet companies in China, except there's one problem. There aren't any. There aren't any. LinkedIn is no longer there anymore. Facebook is not readily available. So what are they going to do? So if they can't exact the same kind of measures on internet companies in China, where are they going to try and exact anything in order to hit American companies, apart from making life difficult for businesses such as Apple? And already, you've seen what's happened. Yeah, you make life difficult for Apple, and then Apple just pivots away, and then they go over to India, which is the new kid on the block at the moment. And I don't envy the regulators or the authorities in China as to how they're going to negotiate this. It'll be interesting to see how it unfolds.
Well, no one said 2024 was going to be boring, and it's just the year that keeps on giving, and we're only in April. David, thank you so much for your insights today.
Thank you.
We've been speaking to David Kuo, founder of The Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be available with our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.